It's Monday. That means it's Setup Monday. Here at Brave New Coin, let's take a look at some charts. Start off with the BTC at the get-go. A lot of stuff on this chart. Let's break it down. We got the cloud in the background here, the pretty colors. The blue and the red lines here are the TK lines. Then I've got volume, RSI, MACD, all of which painting bearish divergences, meaning prices are going higher on less volume, less momentum, and lower MACD. This immediately gives me pause up here. If I'm uber mega long, if I'm paying a bunch of funding, if I'm over leveraged, I see something like this personally and I get nervous and I start closing stuff because it is unlikely that this breaks up. Not impossible, but unlikely. Now you can say rising wedges are bullish, but I'm not in that camp. To me, the biggest issue here is cloud is not yet ready for a move. It hasn't flipped bullish yet, so my system that works for me tells me wait. Tells me if I'm long still, start closing, which I did on Friday, and I'll continue to close whatever I have left up here happily. Let's say this goes to 55 plus without me, then I'll have to reevaluate, but the way this looks here, I would much rather be sitting on the sidelines waiting for this to go sideways or down, perhaps to 40, 42. It may take the entire month of September to get there. It may be extremely slow, but I'll be there for it. We don't need to confirm every previous resistance as support, but this is a good level to watch at 42, 41, 40 down there. Daily 200 is down there. The Kijun is down there. Both of these are going to move up slowly over time, but there's decent support in that area. Now the reality again may be that by the time I get a dip, we may be dipping from 55 back to the current level, right? That's just the way it goes sometimes. But I think the risk to continue to hold up here for me personally is too high. So I cut stuff on the Enzyme fund Friday as well a little bit, and I'll continue to trim that probably end of day, depending on how things look. So this really sets my entire narrative, theme, backdrop, whatever, for the entire market, because if this pulls back, it's unlikely that anything else is going to go in the opposite direction. Now you can tell me that Solana pumped off of a rising wedge, and I'd say, yeah, you're right. Pumped off of a bear div, I'd say, yeah, you're right. Which is, again, it's not an impossibility that this thing keeps going, but it's an unlikelihood, I think. Now, there's a tug and a pull between NFT stuff that's happening right now, old money buying NFTs, new money coming in, buying NFTs. Eventually, people are going to be selling NFTs more than they're buying NFTs. I don't think that's quite here yet, but when that happens, very, very curious what price is going to look like during that condition, let's say. CoinShare is reporting the first inflow in 6 weeks. Mild inflow, so somewhat bullish there. Glassnode's weekly insights, probably the only newsletter I actually read religiously. They're backing me up here saying that there's a divergence in on-chain activity, spending of older coins. So hodlers are unhodling, whether they're buying NFTs or they're buying cash with their BTC, basically. And on-chain activity, which I'm not going to show in the video, but both ETH and BTC have declining on-chain activity. BTC's active addresses are probably the strongest here over the past couple days, but in general, it does not look like to me that this is going to have a push to 55 plus, which is why I'm positioning accordingly. On the 12-hour BTC, we also have evidence for support at that 41, 42 level, 12-hour Kijun, 12-hour 200, and the pitchfork median line from 2019 is down there. Tons of support below 41, so I'm not really concerned that we're going to go lower than that. If anything, we wick down into this pillowy trampoline and bounce pretty quickly. But the aggression we've seen at the buying, I think, is probably going to relax towards the end of the week. There's some options rollovers as well. So definitely all eyes on this. The next stop up is 56 if this does break up based on VPVR. Resistance. So that's what the TA is telling me. ETH, very similar. Probably actually more overbought than BTC, even though it's been a BTC show over the past week, let's say. Ever since EIP 1559 hit, ETH has slowed down price-wise. More and more dApps are implementing EIP 1559. Gas prices are coming down relatively as people are not overpaying as much anymore, specifically on MetaMask, which is a big one. but I don't know, OpenSea may or may not have implemented. I keep meaning to check that, but because basically if you have an interaction that isn't using EIP 1559, there's a potential that you're overpaying for gas. And if you're overpaying for gas, then they're burning more gas than they otherwise would be. And if you're burning more gas, emissions goes down. If emission goes down, supply goes down. Supply goes down, price usually goes up. That's usually how it works. So the 200-day moving average is down at 2200. I don't think we get that low. The Kijun is at 2500. I think that's a reasonable level, and 2900 is the Tenkan. Definitely a TKC clamp here. So again, my whole system that I've used for years is telling me, yes, prices above cloud, but cloud is not yet bullish, which is what I've circled here. There's a massive TKC clamp, which is telling you we're in overbought conditions. We're way above the 200-day moving average. So I remain bullish long-term towards the end of the year, certainly. Over this next week or two into September, which historically is a terrible month for crypto, I'm not expecting miracles here. My expectations are sideways down or just nothing into September until the cloud situation looks a little better, at least on the daily. On the 12-hour, things look fine. You still have that TKC clamp. We do have support at 29. We do have support at 22, 23, right? And again, we don't need to come back to every single resistance level and confirm it as support. But if we do start to fall, these are the levels I'm definitely watching very closely. You can see the 200 on the 12-hour is at 26. The Kijun is at 27. So there's tons of support levels between 22 and 29. I'm not really concerned that we're going to just crash to 18 or anything like that. But I much prefer a dip, wipe out OI, wipe out funding. Funding has been rising slowly. Longs are paying shorts more and more. There's less and less stablecoin on Aave, for example, to be lent out. I'll show that in a second. That's usually a be careful signal when funding is rising and borrow runs out. That's usually a problem because then borrow rates spike. And if borrow rates spike, funding spikes. And then all of a sudden it doesn't make sense to stay long anymore, to be borrowing that USDC or USDT or whatever. So all this stuff feeds into itself. There's a bit of a bear div here on RSI and MACD. I don't know why I don't have volume on here, but probably a div on that as well. On this higher high for ETH. Nothing super specific in candlesticks here, just a mess, right? I don't necessarily see a pattern here. This may morph into an M, double top, and then retrace to 24. That'd be a fine move as well for a dip buy. Alternatively, does this go to 4K plus? I don't think so, but if it does, we'll have to reevaluate. One thing I'm sadly still continue to watch ETH-BTC on the 12-hour. In a vacuum, this setup looks juicy, ripe. It is set up Monday, that's why I'm talking about it, but I'm not happy about it. The cloud here is thinning, about to flip green. You can see it was down only for weeks on ETH-BTC. And if this thing pops up above the cloud with a bullish cloud, that's a long entry signal. It is what it is. Maybe this is bullish for alts into Q4. We have another alt season or something that comes to its penultimate high in January 5th, the first week of January. Very similar to 2013, I think. We had kind of a double bubble situation. Very possible. This looks extremely bullish if this pulls above the cloud. Anything above 670 looks really good. This may take into September, into October to actually play out, but that looks really good. Comp, continue to watch this. Massive setup still here. I'm still holding my comp personally. Haven't cut any comp on the Enzyme fund. If anything, I'm thinking about adding it. Hasn't moved yet. Definitely had inverted head and shoulders, cup and handle. All of DeFi has really moved around it in that it's moved before comp. A potential diamond top here, which I don't want to see play out. This would be a reversal. Any lower low at this point, anything below 400, below 420, probably a good time to step out if you're just trading this setup. So I really hope this thing starts to move into this week. Here are the borrow rates on stablecoins. On Aave, this isn't a stable borrow rate or stable lending rates, but they are quite high. Tether, extremely high. This was at 1 billion borrowed, and it looks like more and more is being sent back home, as it were, or unborrowed, as rates are just insanely high, with prices kind of not moving. USDC borrow versus market size, extremely high as a percentage as well. Gemini dollar, these are 80 to 95% lent out, right? Die as well. So that's why these rates are spiking. Small potatoes relative to the entire market, obviously, and this money can go anywhere in the ecosystem, but it all has a cumulative effect eventually. Eventually, it hits a tipping scale. Funding is just too high. Doesn't make sense to be long anymore. And speaking of USDC, there was an interesting thread from somebody at USDC, Coinbase, I guess, but they specified that they wanted to clarify not everything is or was one-to-one backed by USD, but had some commercial paper in there. I don't know what the fallout from this is or why they decided to do this at this time. Potentially there's issues with Tether and commercial paper. Potentially the US regulators are all over everybody, including Binance right now, to clean up everybody's act. I don't know. Just something to be aware of in the stablecoin landscape. And back to NFTs, OpenSea volume record on Saturday, Sunday, EST. So that is, that's bullish because if gas is high, great, right? We want gas to be relatively high so that burn is high enough, but not pricing people out of the market. Gas is currently 106 to 140, and it has been rising slowly. Saturday and Sunday were kind of slow relative to weekdays, and now we're sort of rising, cruising around 70 plus. TVLs continue to just get crushed to the upside on Ethereum. Avalanche, obviously, everyone's been talking about that. There's a liquidity mining incentive there that is bringing people to the table, and this thing is up 140% over the past week. If I was trading this, I like it much better at 33 based on 12-hour Kijun volume. You know, I don't know how much more this has in it after being up 140%, but the important part here was it did have that triple bottom inverted and shoulders setup. It did have bullish Kumo breakout. All the things that telling you that this thing has legs were there. You know, this looked like everything else. It just performed insanely crazy to the upside, kind of like FTX did, partially because of that liquidity mining incentive. I got to think, you know, that's bringing people to the table. Luna, another one as well. Very similar triple bottom breakout, bullish Kumo breakout on the 12-hour. I like that one better at 20. And lots of NFT craziness going on. Just be careful out there. I think anything on Avalanche is extremely high risk. Anything, I mean, Ethereum smart contracts are risky enough that aren't audited or newer, especially anything new on any new chain. Just be careful with what you're doing and the amount of money you put in certain places. Because as the TVL grows, that honeypot just gets sweeter and sweeter for somebody to look into that code and see if there's any vulnerabilities to extract that value. Lastly, let me just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital and Enzyme.finance, non-custodial portfolio management tool, where you can send ETH to USDC or just watch what I'm doing. You can see everything, including AUM performance, allocations, all the coins I'm in, all the yield plays I'm in here, all of the lending I'm doing currently on the ETH-BTC fund, not holding any Tether for specific reasons related to risk. Just decided, we decided it's just not worth it right now. So we're just going to hold USDC and DAI for the time being. And I do have a very cool back end thing I can do is look at the yields across the board and see what I can get where as they fluctuate. So Tether yields right now are currently super high on Aave, like I mentioned. So until more gets deposited into Aave or more gets sent home back to the address, you know, unlent basically, then that'll stay high. That's all for this one. Like, dislike, comment, share, subscribe. Happy trading.